Hello, my trading warrior brothers and sisters. Ren, H, how are you? Everyone doing okay? Okay, we're looking at our third day up in the Dixie. Shalom, Amira. If I were a rich man, yava viva 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 vum. All day long I'd pity pity pum. Yidle diddle deedle diddle dum. A little fiddler on the roof. We have fiddlers in Washington while the country is burning. I thank you, Kevin. I am. I can't read Hebrew anymore. All right. So anyway, I've been talking about this dollar, and the typical reaction I get is like yesterday, someone said, I'm not impressed with the close. And, you know, there's still a lot of doubt, which is actually pretty good that there's doubt because, you know, that'll fuel it. Tells me there's not a lot of company trying to do it. DSI is not as extreme as it was. But then saying this, remember we have NFP tomorrow. So, you know, I want to go to a little bit lower time frame. And it's very possible, you know, we had some weak ADP data yesterday. So if we don't get a good number on NFP, what I'd be looking to do, and you know, if you got long on the day it turned, you have good money made here and here and here, and on the long side here. What I'd be doing is booking a majority of it. If the number is, you know, very dollar positive, of course, you know, I'll leave some chips on the table, but I'd rather react. If we have a bad number, maybe sell some fib retracement if the dollar weakens on the NFP tomorrow, because we are on the verge of a 2-week reversal. I believe we actually took out the off number at 1796, and so far the low is 89. So, you know, we're right on the cusp, depending upon how we close tomorrow, of a 2-week reversal. And in fact, if we could take out, okay, all I know is I would fade dollar weakness. I don't know what the reason is going to be. I don't know even know if it's going to happen, AJ. I'm just planning what I'm going to do if there's that type of reaction in the NFP. And I'm not going to go into the NFP and play roulette because that's what it is. I'd rather react to the reaction. Everyone with me on reacting to the reaction rather than trying to predict what the reaction to the NFP would be? Okay, I remember being at FX Street and on an NFP day, and one of the traders in the community said to me, Dale, I bought Euro right before the number, and the number was weak, and the Euro rallied. Oh, God. Okay, you're not really thinking of thinking. Okay, and the Euro went up 100 pips, Coach. Do you know what I said? Good guess. It was a good guess. So, you know, that's my belief on red events, including the Fed and NFP. Now, I'll admit NFP hasn't been real market moving, but it doesn't mean it won't be. So that's something to keep in mind. You know, you had a pretty good week. It did happen on a turnaround Tuesday, this candle right here. So I think I asked my guest on Monday if he believed in turnaround Tuesday, and he said, Dale, could it really be that easy that all we have to do is show up on Tuesday for reversals? No, it's not that easy, because you have to be there all the time to be there for the good times. But, you know, it is a pattern that I've seen happen more than once. How many people have seen reversals on Tuesdays that have been around trading for a while? Have you guys seen that? So, it's a pattern that's been around. It's like everything else in the market. Not everything happens all the time, right? Always with Blake. Okay. So, I think that there's a pretty good possibility, and I'm not, proclaiming a dollar bottom here. I'm proclaiming a low, not necessarily the low. The low, only comes when you look back in the rearview mirror after a lot of time. I like that, Zig. Plan. Oh yeah, the last one's hard to do. Oh really? Okay. I thought Blake was skeptical of these. But anyway, so let's look at what it needs. The dollar needs to close just like the euro. It's very close to a 2-week reversal. That would be 93.20, and the dollar too could put in an outside week if we have a good day tomorrow. Okay, so where could we go if we're turning? Of course, the 94 level is key. It was key before we made a new low up here. Maybe you could lower it to 93.5, and then you have some moving averages here. But, when I look at the daily, why can't we rally back to 95.5, or even on the weekly, rally back to the breakdown, which is, around 96, and there's some moving averages at 620. And you take the break from here. I didn't do the fibs. But it's about 1,100 handles, so why can't we rally 4? That would be 38.6, would take us up to around 96. So, that's my focus right now. You're even seeing dollar strength having a little impact on S&Ps today. But, I can't fade this kind of strength with the RSI being over 80 and on the 4-hour over 80. So for an S&P top, what we really need is some type of break, and then a new high with the RSI reading on multiple time frames under 70. Look, even the daily is over 80. You have to go to real short time frames to find any kind of non-confirmation. And even here on the 15-minute, we confirmed. So, we have to at least get a divergence on this. Is the shortest TF I work with. A new high here, and I don't think this was, that we could still have another new high and at least wait for the 15-minute chart not to post readings above 70. So that's my view coming into today. We have Rohit with us at India Chart, so I know a lot of you guys like following the Nifty and what's happening in India. So we'll have Rohit here at the top of the hour. Stick around for him. And since it's investing.com Thursday, started to do this more often if you're interested in becoming a member. Okay, what we'll do is you could talk to Joe today, and we'll offer a price discount on the semi-annual, which works out to 104 a month here. Maybe he'll do a little better, and the annual, which works out to 9 pips a month on a full contract. Okay, and you get everything. So this is our full membership. If you're interested, contact Joe Perry. If you haven't seen our platform, here's our dashboard. And that's Amanda, and you get all of this. You get very rare on a website to have different forms of technical analysis all on one website. Usually they're, the guy's an Elliotician or he does harmonics, but to have, Grega and Andre and Blake and Steve and Stell in here. And then you could compare what's going on. This is traffic lights. Red means, bearish. Green means bullish. Yellow is caution or neutral. So you get all of this here. Anyone interested in talking to Joe Perry, I'll have his email put in, or maybe Joe's even here. So this is going to be a Discount Thursday to investing.com viewers. We do cover stock indexes, and some of your hottest sectors have been miners. And then I just want to leave you with one thing that I was talking about with Nargis yesterday, and she was showing the oil, and I had her pull up the XLF for any of you guys that stuck around for the interview, and the XLF was weak before this happened in crude, and I said the shares implied lower crude prices. In here, I thought we'd get one more high. I don't think we're going to get one more high now. I'd be looking to sell rallies back towards 42 to 42.50 and be wrong over the high. So this is another sign. So a couple of chips in the armor of this S&P rally. I think we will get a top this month for a correction, maybe back to 3,300, 3,000, something like that. But here's a chink in the armor. You have a breakdown in crude on a weekly basis. You could tell. I mean, look at the range compared to what we've had. That looks pretty vulnerable with a lot of space underneath it. We take out 38, we could go 34. I'm actually looking for 32 to 28. I know people that are looking for 15 before this is over. The energy sector is one of the few sectors that did not participate in this huge move up in stock indexes. So, you don't have to be a hero, sell the weak sister. And that was energy. And technically on short-term charts, we finally had a breakdown. So I think you sell rips for quite a while now in crude. And with that being said, I'm going to bring Blake on here. I know that I'm sure getting used to having that bias chart up every day. How about you guys? Having him run through his bias chart makes some things pop out for me as a trader. So I know it does for you. How you doing today, Blake?
Yeah, I hope everybody's enjoying the bias chart. It's something that I did for so many years, and it's I've kind of passed the torch over to Paulie to do it during the European crossover, which he still does his own. But I hope you guys are enjoying it on a daily basis. So thanks. So how's it going there, Coach?
Okay, so NFP tomorrow, but so
Yep.
far not much talk about what the dollar's doing, Blake.
What's that? Yeah. Well, no. Well, we're starting to see actually murmurings yesterday of the dollar, and
Oh, yeah.
you know, just the dollar was gaining strength. Is this more than just a counter trend move, or is it
Okay.
is it going to be a little bit bigger than what we thought? And the fact of the matter is, we are pulling back to some pretty key levels now. Whether the dollar continues here probably has more to do with the jobs report tomorrow, but
Yeah.
I'm actually looking at the most important things to me right now are gold, which is still holding above support for now. Matter of fact, you could say it's low today was right on that trend line support right here.
Wow.
So, as long as we hold above that, you can't get too aggressive being long dollars. And then at the same time, you got the euro dollar that's that's above the channel support, which we've been talking about for the last several days. So,
Right.
Will we break? And will it happen ahead of the jobs report? It could. I mean, you have to realize the stock market has gone straight up across the board. And right now, the biggest reflationary trade is what, Dale? What is the biggest reflationary trade?
NASDAQ.
Well, no. What is the biggest reflationary trade aside from being long stocks?
Short treasuries.
Okay, you guys all suck. All right, no, being short the dollar though,
Oh
right?
yeah.
You know, being short the dollar. I mean, you know, you're just short dollars. You're long gold. You're long crude oil. You're long stocks. You just short dollars. And you know, if the euro breaks through here, and this is kind of how I'm seeing it right now, we might get a little bit of a shakeout today ahead of the jobs report. You know, maybe back down towards, like, let's just say, you know, roughly 117. But for us to go from 117 to 115 probably has more to do with risk appetite and maybe even that jobs report. We might come under some pressure today. I think the euro is going to be really important as far as support goes. Is going to be the one. Well, now it confirmed it last night. The low was 117.89. If you you know, go to ForexAnalytix, go to the analysis from last night. In the event we see further, this is last night, in the event we see further US dollar selling overnight, support should be strong just below the 118 level, as this is channel support.
Yep.
So we dipped to 117.89.
Yep.
And then we bounced back to 118.35. So you can see how strong that support level is. So my opinion is, I probably misdrew this a little bit, which, you know, happens. You know, it's probably just like that. So, I mean, you know, below 117.90,
Yeah.
it's going to be, you know, we're going to probably see some selling.
There. Yeah. Let me ask you this, Blake. If we have like a weak number and the dollar starts to sell off, whatever the number is tomorrow, it could sell off on, I don't know what kind of number. Would you use dollar weakness? Would you fade dollar weakness on the NFP tomorrow?
It depends where other assets are at. It really depends on, you know, where gold is at. I mean, if gold's below 1900 tomorrow, and it looks like it's going to stay below it, and we get some dollar weakness, you know, out of the gate. Yeah. And especially if it's a weak number, because if it's a weak number, the dollar may weaken a little bit, but you also have to think that a weak number is going to yield us a, you know, eventually a stronger dollar as stocks might come under pressure. So really kind of depends on what other asset classes or what's happening in other asset classes. It's a hard question to answer.
Okay.
Right now, because it's not so straightforward. You know, it has been. We've had periods of time where, you know, non-farm payroll, strong number buying dollars, weak number selling dollars, pretty easy. You know, now it's a little bit more convoluted at this point. You know, so anyway, but good question.
We'll see. You know, I'm thinking if we get a rally back towards 119, 1920, I might take a stab. That's selling it there.
Got it. Well, yeah. I mean, if we can get all the way up there, that'd be great. You know.
Yeah.
118.50 roughly is going to be resistance today for the euro. Okay. Cable. Here's the pound. Now, here's the problem with the pound. Dale pointed out yesterday, we had a throwover. That throwover only lasted one day. And he said those are his favorite reversals. Ascending wedge. Now we're attacking wedge support and major breakout point, right?
Yeah.
Here. That's 132. We had been looking at 132.50 for a long time because of, you know, just where we're at. But 132.50, you know, that's an important level of support. So
love that look.
Yeah, we're gonna watch this 132 level pretty carefully. Okay. It's still bullish for now, but you know, you got to be a little careful here. Resistance intraday, you know, any rally back towards 133 is probably going to find some sellers today. Okay. Let's go over to the Aussie. Now this one's scary. Okay. We had rallied above 74 cents. We just dropped below 73, which was the previous channel. This is, Dale's famous throw over. Here we go, throwing up really. And so now we're at really important support here. And this is 72.80. We're on 72.80. So below that is 72.50. I'll write down both. 72.50 is the 618. 72.80 support, and I'm keeping us in range now that we're back below this into the channel. So now any rally back towards 73.20 is probably going to find some sellers today. It's not very far away from where we're at. Kiwi is one of the things, if you read the analysis in the New Zealand dollar, just basic technical analysis, the last couple of days since August 31st, the 127% extension called the rally. I should say capped. That was a typo. Capped the rally, but while we trade above 67.10, we were in breakout territory with the RSI, which is not overbought. And then we started talking about how it's divergent RSI, the risk for longs intraday. And so what has happened is you can see that divergent relative strength as we were moving higher, and it was not moving up with the buyers. It is, it's at risk for bulls. So now we're approaching some pretty key support. This comes in at 67. I'm going to write down 67.10. Okay. We're still bullish for now, but the risk now, I think any move back up towards 67, I think we'd be pretty lucky to get back to 67.75, but I'll write it down. Okay. Dollar Canadian. So the dollar Canadian has an inverted head and shoulder pattern. Right? We hit the 618 retracement overnight. You can see this right here. Right as we closed up yesterday, we hit the 618 around the 130.30, rallying. Now, one of the reasons why the dollar Canadian is rallying is if you look at crude is broken. When I sent out that tweet yesterday, even though I said crude should bounce here, I said if it's going to bounce, it's going to bounce here just because we were on channel support. But in our chat room, I told traders yesterday, I'm like, my opinion is we're going to break down in crude. And we did. I said, I tweeted that, but I'm really saying that crude's going to break down here because relative strength really was showing us what was happening. And, you talk about like the reflation trade and, what the dollar is doing here. This crude oil, there's a article in Bloomberg. It's just on the Bloomberg website. Anybody could have read it. It's there's this oil analyst is like the only reason why crude oil is up here at current levels is because of the dollar. That's it. The dollar starts strengthening, crude oil is going to weaken. And I'm like, I couldn't really argue with that at all. You know what I mean? So
yeah, and it was the weakest sector in the market too, Blake. It didn't participate in this blow off oil shares.
No, not at all. So, I mean, I would not be surprised to see oil trade down into the, into the low 30s again, maybe back down here to high 20s. The reason why I bring that up is because by looking at that and, taking into account the dollar Canadian, we have this inverted head and shoulder pattern that looks like, in my opinion, we're going to come back and challenge 132. So 132 is going to be the really important resistance, which is the big multi-month channel resistance. But right now, I would expect dips back to 130.85 to offer support. Okay. Now that we're past this neckline, I think we have to be more neutral. It is a bullish formation, which, should take us back up towards 132. But, oops, I didn't do that. Sorry, wrong thing. Resistance intraday probably be the 161% extension of this move at 131.30. And then if for some reason we really start to surge, 132 will be key resistance, okay? Dollar Swiss. By the way, we do have ISM today, which is going to be important. We have weekly unemployment claims, obviously, but ISM services data is going to be today. And the reason why that's important is because we have non-farm payroll on Friday. It's always important when we get the ISM on Thursdays. You can see it right here. There's right here. It's important when we get the ISM services data or the ISM data ahead of the jobs report, because everybody's going to be looking at the employment component going into tomorrow's NFP. So just think about that. Okay, here's the Swissy. So the Swissy 618 retracements 91.50. That's the 618 of this recent move lower. I still think while we're below 92 and definitely 92.50, it's bearish. But today intraday resistance is 91.50. Then above that is 92. Okay. Hey, Coach, can you still hear me okay?
I can, yeah.
Oh, you can? Okay. I pulled the mic a little bit further away from my face just because.
That's fine. If only Steve could do that as well, that would be brilliant.
Support
funny
for
guys.
the Swissy is going to be down at 90 cents, obviously. Poor Steve. Okay. And let's go to dollar yen. Dollar yen actually is quite strong right now. And I mean, I really am not focused on the dollar yen. I know we're slightly above channel resistance, but let's just focus on this. 107 to 105. And you guys can deal with it because I'm not. It's actually 105.10, 107, and it's going to stay in range. Dollar index. So here comes the dollar index into channel resistance. So that comes in right here at 93.15. And beyond that, as Dale pointed out, it's 94 is really the big kahuna. I mean, we could get some resistance up here at 93.50. Actually, I'll probably write that down first. 93.50, because that's going to be this trend line that's capping the dollar index. That comes in at, yeah, let's call it 93.50 today. Since that is a trend line, let's mark that up. And we are bearish for now. But if we get above that in the dollar index, things may turn a little.
We have the numbers in about 20 seconds, by the way.
Okay, thank you. Here, let's pull up the dollar. Let's go to data flash. Let's move that out of the way. Let's put this over here. Okay, we have weekly unemployment claims, trade balance.
Around 1 million new unemployment claims per week lately.
Canadian trade balance too coming out.
Okay.
Still better than expected for Canada.
881.
Okay, So not bad.
And the revision slightly higher, but within reasonable deviation. So I think it's not going to do much.
All right. Well. Okay. See if the dollar reacts at all. Doesn't look like it's going to. So, and dollar is a little weaker. You got the euro up 118.20.
It's been almost half a year since the beginning of the COVID story. More than 13 million people still unemployed, and there are still people that believe that, we can, in the press of a button, return back to full employment and all the rest.
Isn't that crazy?
Good luck with that, honestly. I mean, I really don't know.
All right. Well, here, let me finish up the analysis here, and Steve, I'm going to let you go on a rant because it sounds like you're ready for one. All right. Let's dollar
Know your
Mexican
customer.
peso. You're right. Dollar Mexican peso trading a little heavy here. I'm gonna write down key support around the 21.50 level. Oh shoot! I forgot to finish up the dollar here. Wow, look at the euro just ripping. Where am I at? Oh, dollar index. So we've been marking up this number on dips, and I think we got to look at it today too. Any move back down here towards 92.15, may offer some support.
Larry Kudlow didn't get fired, did he?
I don't think
Because
so.
Ziggy's saying Larry Kudlow is one of them on the new jobless claims.
No, he means one of the people that believe,
Oh, I see.
that everything will go back to normal at the press of a button, which between us, you can say a lot about Larry Kudlow. I don't think he's stupid, because if you've heard Larry Kudlow, long time ago, actually you could quote unquote accuse him of being an actual capitalist. And of course now he's just a cheerleader. So, whatever he says has, no real value.
All right, so resistance here. I'm sorry. I'm just wrapping things up here.
Okay.
Just wrapping things up with the
Steve said, he's raring to go.
U.S. dollar, Norwegian krona. This actually we've had a hell of a bounce the last couple of days in the U.S. dollar, Norwegian krona. So we should watch the. I would think from here, any dip back to here would be awesome, which would be 870, 878. Still bearish, but with crude oil breaking down now, I wouldn't want to be on the short side of the U.S. dollar, Norwegian krona. Same with the dollar Canadian. You know what I mean? That's why, the dollar Canadian is getting a lift. I wouldn't want to be there. Okay. Resistance is going to be 906. Or I think we had 907. We're bearish well below there, but it's just, you have to be really careful being on the short side. This is, the counter trend trades are, quite possible in the coming days. S&P still, A, B, C, D. You guys probably got all this analysis yesterday. I'm pretty sure, A, B equals C, D, A, B equals C, D. It takes a strike. Yes, we overshot it by a little bit, but I mean, when this trend is this strong, you can't not expect an overshoot, right? So I'm going to just mark up 35.85, and then support is right here, 35.26, or let's just call it 35.25. Resistance 35.85. and we're bullish. This isn't great resistance and this isn't great support, but the reason why I'm watching this support is because if we start, breaking through here, then that means we are making lower lows, that type of thing. So, wow, the euro is really just squeezing here. Hold on. It just squeezed right past a little bit of resistance. Pound, Aussie, Kiwi, yeah, everything's kind of, this is definitely some dollar selling that's come in. All right, let's go back to, gold. So gold, as you guys know, super close to support. Where is it? Here, there it is. Okay. Everybody should know this. Trend line all the way up, all the way from post-COVID lows. 1920, basically 1925. That's all I need to know. 1925. I'm going to put so many asterisks there because that's how important that resistance is. Resistance 1950. Okay. All right. Your bias chart is done, folks. So there you go. Steve, good morning. Stelios, good morning. How you guys doing?
Good morning, Blake.
Good morning, everybody.
Morning. So we've got, I know you guys have seen it. The dollar's kind of threatening. We've got crude oil breaking down. We've got, gold, it's near support. The euro just, came down and tagged channel support overnight. How are you guys feeling about the dollar here?
I was thinking about it when you were talking about CAD, and I think we should be. It will depend on how many whammies we get. So basically, we have metals going lower, we have oil going lower. If equities also go lower, I know it's a heresy to say it, but if they do, then it's going to be a triple whammy, and I think the dollar has potential to really have a proper run. And also, given that people are very bearish still, sentiment and positioning the dollar, I think we might have some way to go. The problem is that the underlying fundamentals of the US are still relatively weak. So if there is a spike, I think it's going to be short-lived. But having said that, we might get a spike, probably not as severe as March, but it could be relatively strong.
How do you feel, Steve, about everything?
The DXY is testing channels resistance, the exact opposite of what the euro is doing as support. But I also consider 94 a key level for the DXY. So despite the 2.5 day over rally that we've had so far, which looks like a promising start, it's nothing more than a promise until we start breaking these resistance levels, because we've seen a couple of days of previous attempts that lasted a couple of days that took us nowhere. I mean, we got rejected from the first area of resistance, and that was it. So yeah, it seems like a lot of stars are lining up for a potential reversal in the equity rally and the dollar. Albeit, as Stelio said, I also believe it's going to probably be short-lived, but short-lived can even be a couple of weeks, right?
Yeah.
But I think we need a little bit extra confirmation, because lately we have had clear trends both in the dollar and in equities, and especially when you have a clear trend and not a choppy market, jumping the gun because of a couple of days of a rebound or a move lower without really getting a technical event in your hands, I think it's a little bit dangerous.
Oh, all right. Well, good points all the way around. I want to pass it over to you guys and say, thank you all for tuning in. Remember, if you want to try to get ForexAnalytix for free for a period of time, visit our webinar sponsors. Pepperstone Securities is our sponsor outside of the US and Canada. And if you open a live trading account with this link here,
Oh, who's that
it
guy?
goes to the video. Hey, who's that guy? You guys should watch this video. It's with Chris Weston and I from Pepperstone Securities. So, but use this link to open your account. This way it'll connect your account, give you your free access to ForexAnalytix with your live trading account. And then if you're in the United States or Canada, make sure you visit Forest Park FX. They are our partner here in the United States. They'll help you with cashback rebates. So yeah, hey, you guys should watch that video. I forgot it's there. Yep. All
Like
right,
a movie
you guys.
star, Blake.
That's it, right. All right, guys, have a great one. Thanks for tuning in with me, and don't go anywhere because Steve and Stelios and Dale are going to take good care of you.
Thank you, Blake. He has a face for
Thank you,
radio,
Blake.
doesn't he?
That's me. That's me. Good hunting, Blake.
Thank you, Blake. So, hi, everybody.
Hey,
Almost-
scoliosis.
Almost Friday. Almost Friday.
Almost
I thought it
Friday, yeah.
was. Yeah.
Every day is almost Friday.
Even though for you, Steve, it doesn't make any difference because you work weekends and holidays and everything, but that's a different story.
No, it's
He's
okay.
an
We can
android, I think.
Yeah, you can call me Data from this point on.
Lieutenant Commander Data. I love that
Yes.
series.
Oh, so now when we say data's coming out, it means that you're coming out of the closet.
Nice. So we have payrolls tomorrow, as Blake said. We got the numbers a little just now, just under 1 million new unemployed in the US. Remember, this has been 1 million for a few weeks now, and we have the benefits that are lapsing. And if they don't agree, obviously, in extending them, then the checks are going to stop coming. Sorry, and that's going to be a problem. Anyway, we'll see how that goes. Eventually, they will agree. I'm pretty sure.
The checks won't stop coming, Stelio. Just at some point, they're not going to be worth much.
Yeah, that's a good point. We had some interesting data today. We had PMIs out of Europe, and a lot of European countries had been opening up for the past 2 months or so in time for the summer. Greece is one of them. We just can't survive without tourists financially, and there's a pattern here. PMIs did rise, but now countries like Italy and Spain and France, they're going back down, and they're in Italy and Spain are in contractionary territory, back below 50, well below 50 actually. And Germany is still above. They're still doing okay because Germans, well, they're Germans. They're efficient and they do everything right. And but the pattern is that obviously when you open up an economy, the number of cases increase as they have been doing, and people become a little bit more cautious. I know because I am as well. I don't do what I did, a month or two ago, and so spending gets reduced.
So
and
no parties with models.
No parties, no models,
Yeah,
and
okay.
bottles, no. So even though there is no official lockdown, people are going to be self-inflicting lockdown or partial lockdown because they're afraid, and obviously there is good reason to be. So PMIs are turning lower. We want to see
I can also tell you, Stelio, from the inside information, which isn't like a secret or whatever. Aegean, for example, has now taken personnel back to 50%.
The airline, you mean? Yeah.
Yeah. To 50% work hours. They had increased it to 75% during the last couple of months, and there are a lot of cancellations once again, etc. So they're turning pilots to 50% schedule once again, which means that what you described before is quite generalized.
Yeah. I want to see how this evolves going into fall. And, I am a little bit skeptical, but let's see how that goes. We had PMIs out of UK as well. They were slightly worse than expected, but they are at relatively high levels. The services PMI number was 58.8, so well above 50. So it's expanding at a reasonable rate, but they're opening schools as well. I think last week they opened, or this week. So let's see how that affects things. Otherwise, what else is there to say? I think the main thing now, and what I'm watching, is the dollar and the drivers of the dollar, like we were talking about before. So I have my eye on commodity currencies like the CAD and the Norwegian krone. You guys who listen to me will know I have been short Euro Norway, not dollar Norway. A little bit of dollar Norway actually, but I closed that. I'm still short a little bit of Euro Norway, like a third of my original position. I've been taking some profits, and I will be looking to reshort at higher levels, and it will depend, as I said, on the degree of
Speaking
a
of
dollar
which,
correction.
Stelio,
Yeah.
what's at this triple confluence of resistances there? 50 DMA, 200
Yes.
DMA, and this triangle trend line resistance. I think a break above that should point to, to a stronger rebound after, admittedly a long period of time that we had almost no rebounds.
Yeah, I have my stop for the last third of my position above that trend line, somewhere around 1070 or something. I can't remember exactly. I have to check. But I think, depending on how things materialize, and we talked about oil and metals, and look, Bitcoin also is falling today. I don't know what the trigger for that was, but it fell like $500-600 within a few minutes.
Yeah, yesterday it also had like a strong sell-off at some point. It recovered some of it during the day, but look at Bitcoin.
Head and shoulders.
It has broken through this channel, and as you said, it looks like a head and shoulders formation as well. And here is Ethereum, which also got a quite powerful rejection from a confluence of resistances. So both of them were anyhow exhibiting some momentum divergences. So put that in the list of things that point to a possible reversal in stocks as well. We've said that some time ago. Usually equity traders are the last ones to get the message. Gold is testing this key support area. So in my opinion, probably gold following up and breaking through like 1920 to be on the safe side is going to give probably it's going to be the last nail in the coffin, and probably then equities will have to roll over. Crude oil has already broken down since yesterday. I remember it's one of the last things I mentioned in a webinar yesterday that, eventually this thing is going to either break to the upside, which I thought that would be extremely short-lived, or, simply break to the downside. And, it really looks like that's the case. We're currently testing the 200 DMA here in the continues, but I don't know. It looks to me like crude is already broken. So people should really be careful.
I agree. I think crude has another leg lower. But like you said, we have to see what happens with risk assets. If equities turn higher and continue higher, then it's going to be difficult for oil to go a lot lower from here.
I don't know. VIX is also, have been sending like very worrying signals.
Yes, it's high.
For quite some time. I actually saw yesterday a couple of people pointed out that it was the highest VIX close at an all-time high in history.
Yeah, that says a lot, and VIX usually is, it gives a warning. When VIX is high, it's something you definitely need to be watching.
Look at the VXN, which is the Nasdaq's volatility index. I mean,
oh, wow.
even stronger. Like, look at this divergence. I mean, it has been producing higher lows while the Nasdaq has been ripping higher. I mean, it has literally gone vertical. So I don't know. I mean, I wouldn't be buying here no matter what. It looks to me like it can really, really plummet lower. I mean, we've talked about this before. This type of an environment can produce like, huge periods, like 1-2 months that you literally get almost no sell-off, and you get this constant drift higher, and then within 3 days you might retrace like 10%. So I think we're getting closer and closer to the possibility of seeing like a very sharp sell-off. Even if it proves to be short-lived, I'm pretty sure that it's going to shake out a lot of weak hands, because what was missing to call this like a massive bubble in the past was the massive retail participation that we were seeing during the previous bubbles, during the 2007, 2008, and
The tech bubble was particularly bad.
and during the tech bubble. But now, following the COVID response of central banks and fiscal policy and all that, we've really started seeing crazy stuff happening with retail investors. People like using massive leverage through options and chasing momentum higher and bidding up what is already extremely overbought gets more overbought. So I think this is an extremely dangerous environment. And at some point, all these people that are purely trading on extreme leverage and with very, very thin margins, I think many of them need to be punished before, this trend can resume.
Yeah, I agree, because a lot of this is just speculation now. It's nothing to do with fundamentals or anything. So if you're gambling, you have to be ready to win or lose. So
yeah, and the more you're gambling, the more inevitable statistically that you're going to lose.
Yes.
So speaking of the Nasdaq, I'm watching this. We overthrew this large channel, and we are trading actually within this even steeper small channel. The green lines are purely for angle measurement, so forget about them. I think there is a good chance that we're going to bridge through both this channel and the previous channel's trend line resistance, perhaps even today. So from a risk reward perspective, I think short positions here look quite promising. Purely from a risk reward perspective, I mean, I think it's a good proposition. As I said, I'm also watching gold very closely. I think that if gold also loses this support area, probably going to accelerate lower and unfold. Why not towards 1820? I mean, I had my eyes on 1820 since we had this first leg lower. Then it started looking like we might just get a symmetrical triangle, and it's still a possibility. I mean, from a risk reward perspective, if you want to buy gold, you do it here. You can risk very, very little, and if it works out, it works out. But in all probability, if we break through here, equities should follow as well, and probably we're going to see another sharp sell-off. And as I said, 1820 looks quite attractive to me. The picture in silver,
sell-off in everything.
Yeah,
sell everything.
Exactly,
except the dollar
and the VIX.
Yeah. I talked about the VIX early in the week when we were about 22, and Blake was showing that megaphone. Asked me if I would short it here. I said, I would just go out and buy some time and VIX calls, and that way you're not getting run over for 20, 30 handles.
Here's the
trying to
megaphone
be
you're talking
perfect.
about, by the way.
Huh?
Here's the megaphone you're talking about. I only have it on the weekly.
Yeah. And and I didn't expect the VIX to go up while the market kept going up, but I thought that was a better way to play it. You have defined risk. VIX was giving you some indication that there was something going on, even though the market was going up. So, I'm not a big proponent of options. In fact, I say options are like relationships. 90% of them expire worthless. I know because I have a lot of expired statements from early in my career. Oh, no, I don't. I burned them. But the VIX, I was wondering what kind of target you could come up with if we break out of here, Steve, on the VIX.
Yes, absolutely. So the VIX, I think, is going to be attracted once again to this 45 level area. And from what we've seen in the recent past, we can really explode towards 45 in a matter of 2-3 days, right?
Like last time.
Yeah, like last time. Now, somebody can say that in this environment, equities will continue to climb higher for quite a period of time. And in that context, we might start seeing like a series of lower highs, which is a valid argument. But even if that's the case, I think, okay, previous time, previous little spike was at 48 and the next one was like at 44.7. Even in that context, yeah, we can make it to 40, for example. And, given where we are having to do with equity prices and the indices, 40 is a very high reading. And especially if we get there in a couple of days, we can very easily see, as I said before, like a almost 10% retracement in a matter of like 2, 3, 4 trading days before people start stepping in again and buying everything. Of course, everybody, if that starts happening, everybody's going to start looking in the direction of the Fed and wait for some type of a hint, that they're willing to take an extra mile as every time it happens. And that's one of the multiple reasons why, this type of monetary policy is just insane, because the first thing it brings on the table is extreme moral hazard. Because every time something goes wrong, everybody's looking in the direction of monetary policy and it's like, okay, what do you have to give me now in order for me? I mean, the stakes are going higher and higher. We're climbing higher and higher. The air is more thin, and there is more energy that is required to keep valuations that fundamentally make no sense, because we're just being fueled by easy money and extreme monetary policy measures. And
how about, Steve, that markets are selling off and Congress finally feels pressured to get another relief bill out? It's not the Fed this time, that maybe it's fiscal.
I think inevitably, and I had said that a long time ago, I think inevitably, Dale, especially pre-elections, they will release another relief package, no matter what.
Well, maybe this will be the motivation for them to do it if we sold off 10%.
Yeah, I mean, will it push towards that direction? Yeah, absolutely, it will. Do I think that even if we don't have like a big sell-off in equities, they can go all the way to the election date under current circumstances without throwing another relief package? No, I think one way or another they will. Perhaps a sell-off in equities will make it be bigger, or more inclusive, or who knows what.
Because do you remember TARP and the
of course.
Okay,
target,
so,
asset release, relief package.
Well, they didn't pass it the first time.
No, they didn't.
And the
they
market locked up. Right. So
Yeah.
the next day they passed it.
Yeah.
Okay. So, sometimes market pressure also gets, our representatives to respond, not just Jerome Powell.
Although it's not the same thing, because they've already rescued the key components of the financial markets.
Yeah,
because
corporate bond market, junk bond
exactly.
Market.
So they've already saved them, because they completely seized during the first, after a couple of weeks through the COVID lockdown. So they saved all of those. I mean, they in essence they made those 10 SPVs and they bought everything, and they're still trigger happy, and they'll be more than happy to buy everything. That's why we've seen like traditional correlations, like yields, for example, in poorly rated corporations move lower despite bankruptcies climbing higher, so on and so forth. So they've already rescued the financial system. So TARP is not a good example, because then they had to act in order for the wheels not to completely fall off the bus.
Yeah. Okay.
Unfortunately, they're not so sensitive with humans.
Yeah.
and the only reason they're going to be a little bit more sensitive with humans now is because humans are going to be called to vote in a couple of months. That's the only reason.
Okay. So it is interview time.
Okay, who do we have today?
We have Rohit Srivastava at India Charts. Excellent. He was very bullish last time he was on, so I'm interested in seeing
Let's see
if
what
he
he
thinks
thinks
things are too stretched. And he flipped from being bearish to bullish last time on. So let's see what Rohit has to say. Thank you, Steve. And Rohit, I'm getting you set up right now. You're unmuted. Welcome back to Face at India Charts.
To be here today.
There you are. We got you, Rohit. How are you, buddy?
I am good.
Okay, so you remember how to share your screen here?
Yes, I'll do that.
Okay. All right. So thanks for coming back. I did acknowledge that you flipped from, kind of being a deflationist bear to becoming constructive, saying things had changed and bullish. And since our last conversation, it's certainly been that type of environment. The question I have now is that enough for now? So start wherever you want. Looks like you prepared some stuff for us. So dollar cycle still bearish.
Yes. So I think this is what caused me to flip. And I discussed it last time that the dollar index had a 5-wave decline in the year 2017 to 2018, which is this fall, which I've marked as A or 1. And when I do my wave counting marks, I look at the spot chart. So it was really important that this entire bounce does not go above the high that we made in 2017 on the spot data, which is what ended up happening. The futures did spike a little bit above that, but the spot did not. And so going by the spot, I've marked this as 2 or B, which is almost a double top. And we are starting what should be a third wave down for the dollar index. And it was a historical
what
study.
would change your mind? Where are you wrong on this count?
Well, I would be wrong only if you go above the high itself, which is above 104.
Okay.
So that was the testing phase, 2019. For a long time, I think we were at 61% and 66%. So it almost looked like you'll get that swing down from there itself. It didn't happen, and the pandemic really swung it all the way to the double top point. Now from there, just because we didn't cross it, it gave me a sense that possibly we could have started a third wave, which is what it's looking like. And then you've had all the central bank action confirming that. And then what I was looking at is the time horizon, because people always want to know how long the reflation goes on. Is it just over tomorrow? See, the level of fear today is every month people want to know, is it over? And
right. You have it going out to 2023.
It's long. Sorry?
I see that your yellow line has the bear market extending out to 2023, and that's based upon that it started at the high in
2017.
Yeah, okay.
So
all
7
right.
years somewhere into 2024.
Okay.
Given that at least the last $2 bear markets were 7 years long, and the last $2 bull markets were 9 years long. And going by that, I just added 7 years to 2017.
Okay, let me ask you this. During this bear market in the dollar, of course, precious metals have done well. Do you have a favorite fiat currency that you would park money in outside the dollar during this dollar bear market? Would it be Aussie? Would it be Euro? Would it be your currency? What currencies are attractive to you in this phase?
I think that's both a good question and a difficult one. I've really not tried to look at the relative strength of which currency to be in.
Okay.
But if I think of reflation and if it means rising commodity prices, the easy answer is go with currencies that are commodity producing in nature, like the Australian dollar,
Okay.
Be on top of the mind.
Okay. All right. Thank you. What's next?
So So yeah, we have this in place. So this becomes the underlying theme that as long as we are in a dollar bear market, I would be bullish on most asset classes, especially emerging markets. And that brings me to the Nifty. And so the flip that I made as far as at least the Indian market is concerned is when we were looking at this ending diagonal, I thought it was probably ending the entire cycle. That is probably the fifth wave itself was ending. What I think is it probably was the fifth wave was only the third, and the decline that we saw into March of 2020 was the fourth, and we are now looking at what is a fifth wave of this entire move that started from 2001.
Okay.
So this can carry on. One is it can carry on to new all-time highs. Okay, and of course there will be corrections in between, so we cannot rule that out. Somewhere we'll complete a 5-wave structure. Wave 1 maybe closer to 13,000 or maybe higher than that, and then we probably get that wave 2 correction at some point is what I'll watch out for. But overall we continue to head higher maybe for a couple of more years along with the reflation that will occur because of the falling dollar. Now, unless that changes, then probably changes everything, but keeping that in the backdrop, I think this is the best scenario to go with.
What about markets that have taken out their pre-COVID highs? Are they already, what stage of 5 are they in? Are we completing, 1 of 5 or 3 of 5? So there's one, right?
This is a slightly messed up chart because I have my bands and all on it, but
it's okay.
I can take a cleaner one. Yeah. Now, if I look at it like this, so now I'll give you two scenarios. This is the one that everybody wants to play out, that, this is some kind of fifth, this is a bubble, it's going to collapse tomorrow. And, but when I really drill down to the internal wave counts of this structure, I cannot mark this as a 5-wave advance anymore, simply because if this is the third wave inside it, it's already become the shortest. Okay, so this third wave is already the shortest. And the best way to then mark it is a series of 1, 2, and 1, 2. Okay.
Oh, yeah. That could go on forever, right?
That could go on for a long time. So we are somewhere in the third of third. There's going to be a fourth, there's going to be a 3, 4, and 5. And so that can go on for quite a while.
Okay. Would you say the markets that are making new highs, even though that count's not going to work, because that would make wave 3 the shortest, that U.S. markets are more vulnerable at this stage for correction than, say, the Nifty?
Not on all points, because when I look at the US market from its internal perspective, which means if I look at the Russell, I look at the transports, I look at all of them, right? So the moment I start looking at all of them, they've all not really participated. So if I only look at the S&P and I just draw a simple indicator, which is your RSI, and the RSI is now at almost 82, you would feel that it's susceptible to a decline. And even the RSI for, I think, the NASDAQ is almost 85. So that's high. And when we look back, you see the 2018 top where you had a flash crash after the RSI really hit 86. But the history of RSI is that probably this flash crash of 2018 is the outlier, because if you go back and look at the last multiple occasions of high RSI readings, they're usually indicative of a strong market that is developing. And the final top in the market really does not occur till you get a negative divergence. Even after a very high RSI read, there will be a pullback, then there's further high, then there's a negative divergence, and only then maybe you get a final high. That's what I've typically seen in these scenarios. So I wouldn't want to compare with 2018 and say, oh, this is very high and it's going to, get hit. There could be a correction to get it out of the overbought scenario. But when I see the Dow, say, for example, it's just getting into this zone. It's just crossed 75 yesterday, and it's still not there. If I then move on to Russell, it's actually gone through a long consolidation. All of August, it has been consolidating. The Bollinger Bands have tightened. Looks nothing like the other indices. And so for all what I would expect is when you see a slight pullback coming in maybe the S&P or so, you actually might see strength in the small caps and mid caps in the US. So the Russell would actually take off to a higher zone. Now the same would appear to be in the transports as well. And I think the utilities picked up yesterday. So this rotation, essentially rotation between sectors, and we are seeing something like that in India as well, that there's continuous rotation. There's one sector does well, then it shifts to the second one, then it shifts to a third one, and the market continues to move higher. So
Okay.
I think that's what we need to watch out for.
All right. Well, Nareej Jain is asking for a review of the bank Nifty. And the banks, the financials in the U.S. have been one of the underperforming groups, as well as the energy stocks. So I'm wondering if that's happening in India too.
Yes, to a lesser extent, but definitely yes. And I think most asset classes tend to correlate significantly around the world. But that said, the Bank Nifty last week actually did beat the US Dow Jones Bank Index, because the bank index in the US has actually not gone past its June-July highs. But the Bank Nifty managed a late rally in the last part of August. And so last Friday, it was actually up here. And then this week, we actually got this one bar sell-off, and we've been sort of consolidating. If I'm really not going down to an hourly chart, but there's some sort of a triangle pattern out here on the hourly, and that tells me this is a very, very minor degree, 1, 2, 3, 4 going on. You've still not completed this move. And how it started off is, so I have what I've marked is I've marked this as the orthodox bottom in wave Z of the previous decline. Okay, so to put it like this, and this initial move is 1 and 2, and we are somewhere in the third wave. So that's still developing. My sense is it would at least go to the point where the third wave is at least equal to the first, if it doesn't become an extension. So the minimum expectation would be that it carries itself somehow to say 28,500, with the main hurdle being the 61% retracement mark, which comes in somewhere around 26,300. So that's what I'm looking at.
Is there anything impulsive in that chart? I mean, to me, it all looks, corrective action since we bottomed. I mean, where's the impulsive?
This initial wave is a 5-wave move up here.
Okay.
And so what I've taken this as, and which is why I drew these lines, this is a leading diagonal. Okay, so it's a 5-3-5-3-5 structure.
Okay.
Okay, so I've taken this as 1, 2, 3, 4, and 5 inside of this. So there's also 1, 2, 3, 4, and 5 here. Then this itself is an impulse. So each of these rallies are impulsive, but they're overlapping, which is why it's a leading diagonal. And from there, we started a third wave. Now we can argue that this leading diagonal is A or whether it's 1, so that we can leave open. But it's still a third wave, so it's 3 or C which is going on. And till we complete all 5 waves within that, I think there's still some upside potential.
Okay. So anything outside of equities that you're paying attention to? Equities, the dollar, mining shares still look pretty good, don't they? And there is a request for the Indian Oil Corporation of NSE. Do you follow that?
Okay. So the oil marketing companies, while I have liked them, have been pretty lethargic right now. Okay, I do sense, just looking at the Indian oil company, that it's made its first wave up, probably consolidating in wave 2. There's one long consolidation going on. It could be W, X, Y, complex correction.
Okay.
And once we complete that, probably we do get a third wave, but a much slower move happening in this sector right now. So, which is where we are really not seeing the momentum.
Yeah, same with U.S. oil companies. In fact, the oil price has been stronger than the shares, and to me, that's kind of negative. But
so, since you just asked me about
metals.
So I do track. Actually, Metastock used to have my data feed for the HUI. But the vendors actually pulled it out. But anyway, we have it here. So the HUI, when I really moved to a slightly longer term chart, I think it bottomed around there where the dollar really peaked in 2016, 17 along with gold. And you had the first wave and then you had the second wave. So I think this whole structure, the way I've gone about it is taking this entire thing in as wave 1 and wave 2 into the March 2020 low. And from there on, we started, I think, a very powerful move in the third. So this is nowhere done. I'll just drill down to the daily chart and break it up. So the third wave, the major wave, is actually started from this March low, from where we are now breaking up into multiple subdivisions, which I think will simply go on because the initial legs have ended up being 1 and 2. Then you have another 1 and 2 going on right now. And once you complete that, then you have 3, 4, 3, 4, 5. So long way to go. I think this is,
Okay.
I mean, this is the obvious place to be when you have a reflation trade. You have gold going into a bull market. If you're looking for higher returns, then gold, definitely gold mining, US stocks make up for that.
Do you ever think what, when you have a narrative, what events, I know you're mainly an Elliotian, but you also have a good feel for what's happening economically. Do you ever think what would change your narrative and what could be behind weakness in the dollar ending? Is there anything you could come up with that would change that scenario?
Yes. So the risk is how far does inflation go such that it forces the bond market to react, right?
Okay.
So moment you are forced to raise interest rates, and we are all well aware that debt levels are very high in this world, and you cannot really have higher interest rates. So even from an India perspective, I continuously keep watching the Indian 10-year G-Sec yield, and India's 10-year has actually been pretty peculiar. So I'll just open the chart.
So interest rates are the only thing that could derail this.
Yes, interest rates could derail it, and the fight, of course, has always been between deflation first or inflation first. And as long as you had the rising dollar, the risk was you could end up with deflation first. Now that you have so much monetary action, government stepping in, the tide has turned towards inflation first. Now, if inflation numbers really turn out to be so high that they force bond yields higher, that's where I think risk comes.
And that would be pretty far down the road.
Yeah.
Right?
So it's going to be markets going to I think, as they say, fall on their own weight at some point of time. They're going to pop on their own. It's not going to be driven by something. But
so right now you're looking for a little pop in yields before yields go to new lows again.
It has happened. This chart is not updated for the latest data. We've seen a slight pop till here around. We've seen it come up slightly above 6%.
Yeah, 10-year has popped a little bit too, from 50 to 65, 70. Yeah.
So this is the latest chart, right?
Okay.
So the pop is visible here. So I'm marking this as this initial leg down as a 5-wave decline. I thought this pop could have gone higher. Maybe we always open to the 4th wave, so we don't know whether it may even further subdivide and give you that pop. Because in India right now, despite all the slowdown, we are actually seeing inflation data spike up. So the Cpi inflation, the consumer price inflation because of food prices, is actually hitting around 6.2% again. And the Reserve Bank's target range is actually closer to 4%. So they are above target. They're not really raising rates. They're saying this is temporary, which may be somewhat true because we are going. We have our food prices are driven by our agricultural season, and right now we've actually had a good monsoon, so that usually results in a good output into the year end, and that would sort of take care of the food inflation part.
Well, did you have any supply chain issues? And COVID isn't exactly under control in India, is it? It's starting to actually accelerate, isn't it?
Yes, it's. I would say it's just been continuously expanding. It's not accelerating, but it's maintaining that pace of number of cases going up are regularly increasing at a certain pace. So
how many cases a day in India?
It's over 70,000.
Okay, but compared to the U.S., where your population is what, 5, 6, 7 times greater than ours?
Right.
All right, so if people, so it's not a real equal comparison. that you have more than us because of your population. Are people embracing, since you come from a different culture, a lot of Americans are embracing wearing, well, not that they feel wearing a mask is an intrusion on their liberty and freedom. How's the compliance in India for people trying to be safe?
So most people are wearing masks. If I go out on the street, everybody seems to be wearing one. Of course, there are some people who may be inappropriately wearing it, like only on their mouth and not on
Oh
their
yeah, I
face.
see that. I see that a lot. Yeah, where their nose, people expose their nose.
Yes,
Yeah.
but otherwise everyone's on a mask.
There was Rohit. There was. I saw on the news. There was a woman who had one on, and she cut a circle out in the mask by her mouth, so she could breathe. So I guess everyone needs a chorus on how to wear a mask. So, with your scenario here, do you have? You probably have some astronomical numbers for where gold and silver could go. Do you have
Yeah.
something you want to show us there? You're looking for 30, and is this in dollar terms?
So here we are looking at gold in dollar terms.
Okay.
And this is the COMEX price.
Right.
And my sense is the last bull market started from here, which is 2000 and around September 1999. So this is wave 1, 2, 3, 4, 5. We had this first bull market, so I've marked this as a larger wave 1 and wave 2. And my sense is we started a third wave. Now there's some debate on whether I take this 2 here and have a truncated Z over there, but I think sometimes that this is better because we had the ending diagonal, which is usually the last stage of a move, occur into the lows of 2015. So this is the ideal point. Then we had this long first and second wave, and then we are into this third wave. So within this third also, 1, 2, and I think the 3 is really subdividing. Now I could have, so when you say astronomical numbers, if I take really long term, if I say we are getting a third wave, which is either equal or it's 161%, if I just say it's equal, we end up at $8,000.
Wow.
Right. So if just the third wave is equal, we are way far off. And in the near term, so then I try to measure, one is the size of this first wave. And then as we are further subdividing the third into 1, 2, 3, 4, I'm also looking at the size of each of these individual structures. So the first wave and the third wave here are almost equal to each other. We are forming some kind of triangle in the short term. So I do think after that completes, we will get a fifth, which can go up to around 2,370. And that would also somewhat coincide. In fact, it would overshoot the quality with the third. So I wonder if we're going to get an extension. So if I do a 161% of this, then we get a number which is closer to around 2,550. So those are two numbers for the near term, 2370 and 2550. Once the next rally really picks up.
Okay. So if that's it, why don't you show people your website?
Sure.
And how they could get a hold of you and follow your excellent wave work.
So my website is indiacharts.com. We've just recently last week launched an app. The website is also redesigned since the last time I was with you. So we've put everything here under categories. The moment they go into categories, they can choose Nifty, they can choose currencies, commodities, stocks, or the long short report, which is my monthly strategy report. And if they like being notified about everything I write, the best way now is to just download the India Charts app from the Android store. We'll have the iOS version in another week. And once they sign up, they just get notified about all the articles I'm writing. There itself, they can post questions right at the bottom. So I try to answer as many as I can. And that's the way to do it.
All right. Well, I love having you here and getting your thoughts and your counts and your views, and appreciate you coming here to edify our community, Rohit. And my trading warrior brother, I hope that you and your loved ones remain untouched by this virus, and that you continue to have prosperity with your wave counts, and also for everyone that you work with. So I appreciate you being here today, my
Thank you.
trading
Thank
warrior
you so
brothers.
much for
Thank
the
you very
wishes.
much.
I wish you the same, and really happy to be here.
Okay, so that's it. You can also follow Rohit on Twitter at India Charts. And I know every day in Face, people are always asking for the Nifty. You got to follow this guy if that's your interest. He has a handle on global markets, but you know, everyone focuses on their native local bourses. So anyone in India, I would definitely recommend following Rohit. Thank you, buddy.
Thank you. Thank you so much.
All right, so that's a wrap for us today, and we'll see you tomorrow for the NFP. Remember, don't just count your pips, count your blessings, and we'll see you tomorrow for the number. Adios. You're very welcome. You're very welcome.